Hello, good afternoon from the UK, and obviously welcome if you're tuning in the morning time in the US, and obviously in Asia into the evening time across Singapore, Hong Kong and elsewhere. It's an absolute pleasure to be presenting a new opportunity with Irish Capital, who we've worked with previously in the golden visa sector, and also to be providing an update on what we're seeing in the market in terms of the Portugal golden visa space. I'm delighted that Rakesh Majitia is here today to join us. Rakesh, thank you very much indeed for joining.
Thank you indeed, Grant. Hello everyone and welcome to today's webinar.
Thank you for joining, Rakesh. And of course, unfortunately, Rosalia Kuyas cannot join today. But I know that obviously you'll be covering her element of the presentation. So thank you for doing that at short notice too.
Sure, no problem.
So thank you again for joining. Hopefully during this presentation, it will really enlighten you to the golden visa process, to the actual opportunities that we see and what we're seeing going on in the marketplace. And there will be a chance for Q&A at the end. So do provide your questions as we go through. It may well be that we don't have a chance to cover the question during the webinar because we try to keep these relatively concise for about 45 minutes. But do rest assured that we will come back to your questions in due course. So let's get into the presentation. If we can go into the first slide. So what we're going to cover is investing in Portugal. We're going to share some sort of high-level overview data in terms of what we see in Portugal right now relative to the golden visa space and the assets we're investing in. We will talk about the golden visa overview. We've seen some changes in the marketplace, of course, since last year. And obviously, we will present what the opportunities are in 2022. And then we're going to talk about a new commercial investment opportunity that is in my view a really fantastic opportunity. It's something that actually was recently launched and is already about 75% sold through, so that gives you a sense of that opportunity. It's a real trophy asset in the Avenue de Liberdade in Lisbon, and I don't want to go on too much, otherwise I'm going to steal Rakesh's thunder. So we'll come on to that later on. And of course, then there'll be a chance for Q&A, as I mentioned. So if we get into the next slide. So just a little bit of background to IP Global. For those of you who have tuned in perhaps for the first time, we are a research-driven end-to-end property investment company. I joined the business in 2006. I've been in the business for now 16 years, based out of Hong Kong and Singapore primarily, but I've recently relocated to here in the UK. In terms of as a business, we've transacted on over $3 billion of property investment across 15 countries. Therefore, we have considerable experience, and for where we invest, we believe we are extremely transparent, so we will provide the necessary data around each of those investments for our investors. And in effect, where possible, we co-invest. So we actually put our own capital into to demonstrate our belief in opportunities. Next slide, please, Bella. Okay, so what is the Golden Visa program? Well, in effect, it's available for anyone who is not Portuguese, not from the EU, bar a couple of nationalities. It's a scheme that was launched way back in 2012. It's basically generated a lot of investment and growth in Portugal and continues to do so. I think one of the great things about Portugal is where it was hit so badly during the financial crisis, it's really only been in recent years that the market has started to recover. So we see lots of value in Portugal, and we see lots of opportunity to invest, aside from the fact that it is a great passport to have. It provides lots of benefits. It provides benefits across the healthcare system in terms of education, across visa-free travel across the Schengen region and other countries in the European Union. So it very much is a first-class passport that's on offer in Portugal as part of the Golden Visa program, but also it's an excellent underlying investment opportunity in various sectors. And of course, we're going to touch on more detail around the Golden Visa, around the passport opportunity, and around the commercial investment opportunity that we have launched during the course of this presentation. Next slide, please, Bella. Okay, so at this point, I'm just going to hand over to Rakesh. I will let sort of Rakesh obviously provide a little bit of background to Arish Capital as we go through the presentation, but I'll hand over to Rakesh at this point in order that he can share more on the Golden Visa process and obviously the asset. And over to you, Rakesh.
Okay, thank you, Grant. Thank you, IP Global. It's great to be partnering with you guys again on this particular asset. And thank you everyone who's attending today's webinar. So I think just to pick up on some of the themes that Grant mentioned, the idea over the next sort of 30 to 35 minutes is really to take you on a little bit of a journey through Portugal. I'm not sure how many of you would have had the opportunity to go there. So for those that have been there, this will be revision of some sorts, but for those that haven't, this will be some sort of vision. And we've broken the presentation down into a couple of parts. One is an introduction to the country of Portugal, just some of the main highlights, the economy, then the real estate market. We then move on to the Golden Visa program, how you can access it. And then finally, we land on our latest development that we launched most recently that Grant's touched upon, which is a commercial investment opportunity and also Golden Visa eligible. So Bella, if you could move to the next slide before we go through those sections, if I can start perhaps at the beginning so I can give everyone a little bit more background to Arish, who we are and what we do. So Arish is a real estate investment and development company. We've been going now for just coming up to 12 years. We have our offices in London. That is indeed where our head office is. In Dubai, which is actually where I sit and have been for the last 9 years. And then in Lisbon, where we have all of our technical team, construction directors, etc., that look after our Portuguese assets. In terms of asset focus in the last 12 years, it's very much the case that our life started in the UK and we continue to be very active there. And I would say that we focused on quite niche asset sectors. So a lot of student accommodation, care homes for the elderly, as well as residential and commercial schemes. Some of those we went on to exit institutionally, others we continue to sit on our own yield portfolio. Around 4.5, 5 years ago, when Brexit got announced, we felt that the UK market was going to become a little bit more stagnant. And hence we decided to sort of expand our European footprint. And having done quite a lot of due diligence across various EU countries, including the obvious ones like Spain and Germany, etc., we very much became bought into the Portugal story. We like the macroeconomics there, we like the stability in the government, and we feel that there's just various factors that overall support real estate investment. So Bella, if you can go to the next slide, I think you just have a snapshot of some of our prior projects. You can see there some in the UK, student accommodation ones, and then the remainder on this slide at least are the Portuguese assets. Actually, all of these are now sold out. And the one that we're going to be focusing on today is the one in the bottom right-hand corner, second from the bottom, Liberdade 227. So we'll come back to some of the detail around that in a second. But Bella, if you go to the next slide. I think a reasonable starting point for anyone looking to invest overseas is why would you invest in country A versus country B? And we had the same question. As I mentioned, we did a due diligence period across various EU countries, and we typically started with a three-pronged test. And I think it's worthwhile us sharing this with you because you may seek to apply a similar sort of test. But the three things that we always wanted to cover off was, one, we wanted to understand the nature of the government. Was it stable politically, and did it have any policies that were particularly encouraging of foreign direct investment? Secondly, we wanted to understand the nature of the economy, how robust it was, how mature, well diversified or not that it may or may not be. And then thirdly, we obviously wanted to understand the nature of the real estate market, whether it was emergent or saturated, etc. So once we can tick those three things off in a positive way, then our starting point is that we could have the makings of a smart investment. Smart why? Because property is quite predictable in most people's minds, as it should be. You want it to give you yield and you want it to give you the possibility of capital growth. So that's how we moved forward with Portugal. In this particular instance, for individual investors, there's also the added benefit of not only giving you yield and capital growth, but also you get the golden visa element, which we'll come on to in terms of some of those benefits. Next slide, Ben. So starting with the country of Portugal, as I say, just some of the headline issues. It's a relatively small European country, a population of 10.5 million, has a very high life expectancy, and I think that really speaks to their healthcare system, which has very much become a central policy for successive governments in terms of their investment into the healthcare system. Portuguese is a language that is spoken within Portugal, but you'll be pleased to hear, as I was, actually above 60% of the population speak English very well. Actually, all the public places as well are dual signposted in English and in Portuguese. It does have a very affordable cost of living, and I think that continues to be, even in these inflationary environments, continues to be an important theme for many, many people coming to Portugal. Next slide. Now, in terms of the government itself, we always describe the Portuguese government in the way that we say it's strong and stable. It, in fact, has been a democracy since 1976, part of the EU, and therefore you get access to the EU if you happen to become Golden Visa eligible. But more importantly, the governmental policies have been both inclusive and progressive in nature. What does that mean? Well, there's perhaps no better example than some of the policies that the government has introduced for the last 12 years in terms of foreign direct investment. The Golden Visa scheme is a good example of that, but it's not just individuals Portugal has been seeking to attract in the last 12 years. It actually has any number of policies that have attracted lots of multinational companies to choose Portugal as their European headquarters. It is actually the third most peaceful country in the world in the index, if you can believe there is such a thing, ranking countries by their sort of peacefulness. Actually, Portugal features as number 3, behind only Iceland and New Zealand, which obviously have much smaller populations. Next slide. Now, the economy itself is obviously important when you're looking at any new country. And I think for us, perhaps one of the most interesting factors was when we were looking to invest in Portugal was actually the GDP growth rates. Back then, Portugal was poised and predicted to be one of the fastest growing economies within Portugal. And indeed, now when you look at these metrics, for the third year running, it has indeed been top of the pile. And there's a reason for that. I think most people's frame of reference starts with the financial crisis back in 2008 and very much lands to today where we are post-COVID. I think Portugal has been definitely one of the winners from the cleanup in 2008. It actually does have a very mixed economy, whilst most people locate Portugal from a touristic perspective, which is an important string to its economy. It actually does have a very diversified economy in terms of manufacturing base. The real estate market is very strong. It recently has become more and more important as a European leading tech hub. So if we go on to the next slide, you can see here any number of multinational company names. Hopefully most of these resonate with you, who have chosen to choose Portugal as their European headquarters of sorts, partly because of the policies that the government has introduced from a tax perspective, partly because they know they can attract good talent, and also at a very affordable cost of living. Next slide. Now, turning to the real estate market, and if we go to the next slide, one of the reasons 5 or so years ago that we actually decided to enter into the Portuguese real estate market was actually because of this metric. You can see there on the bar chart a comparison of residential prices per square meter across various European capital cities. And you can see there that Lisbon is very much undervalued versus its European cousins. And for us as an investor, that was a good starting point, i.e. we wanted to enter the market where we felt there was growth trajectory. And therefore, that is part of the reason that we decided to enter into Portugal as an investment location. If we go to the next slide, some of those metrics have borne out because you can see here that house prices have grown almost 10% across, and these metrics are relatively recent, across the whole of Portugal. The range is anywhere between sort of 6 and 12, but an average of 9. And whilst that trajectory may not continue at that same sort of level, there is definitely predictions that it will continue to rise. And we would be far more conservative in our assessment, looking at sort of capital and yield rates of between 4 and 5%. Next slide. Now, hopefully that's given you some sort of understanding of the country of Portugal, the economy, the government, and the real estate market. Flipping over to the next slide, what we wanted to do is talk a little bit about the Golden Visa program. Now, this is a program that was launched just over 10 years ago now, and the basic logic of the program was to encourage foreign investment into the country of Portugal by way of real estate investment. And if that real estate investment carried certain characteristics, it would also entitle that foreign person to become a resident of Portugal for 5 years. And after that, they would also be entitled to apply for citizenship, i.e. passport. Now, given that the program was launched over 10 years ago now, we do have some very important metrics which really justify or give people this proof of concept. So what do I mean by that? Well, some of these metrics here, since the program was launched, there have been 11,000 residency permits issued to individual foreign investors. In and amongst those main applicants, also taking into account reunified family members, there's another 18,000. So in total, there's almost 30,000 residency permits that have been issued since the program launch. That equates to just over 6.5 billion of investment over those 10 years. So I think very much giving people some context in terms of that proof of concept. Next slide, Bella. Now, because the program has been in existence for 10 years, the program has changed in that period, as you might expect. It's adapted to become more flexible, etc. And on the left-hand side, and perhaps the most popular way that people have availed their applications to becoming a Golden Visa resident has been through property investment, as I say. Now, the property investment is offered in various different flavors. Those flavors primarily relate to price points. So you can see on the left-hand side, you can enter into investments for 500,000, 400,000, 350, and 280. Now, the main difference between these investment thresholds are, number one, the location of the asset, and number two, the type of asset. So the bottom two categories, 280 and 350, are typically renovation projects. And that is actually the type of asset that we, Arish, sort of specialize in. And that's where all of our projects to date have been centered on. There are other ways that you can access the Golden Visa program, but I think if you look at the metrics that are issued by immigration, it's probably less than 5%, but you can invest in private equity funds, which have a value of 500,000 euros, or you can invest into company capital within Portugal of 1 million, or indeed create jobs, and the minimum amount of jobs in Portugal would be 10. Those latter three categories, in our experience, are seldom used. And by far, it's the real estate investments that have dominated the market. Next slide. Now, in terms of getting into the program, as you might expect, as well as investing in an eligible property, there are some requirements that Portugal has in terms of being able to access the program. So on the top dark blue line, you can see what those requirements are, and they're fairly simple. Number one is you need to have a valid passport from your home country. Secondly, you need to be able to evidence a clean criminal record. Thirdly, you need to have proof of the investment. Keep in mind, this is a program to encourage foreign direct investment into the country. So they want you to be able to show that you have the funds required. And then finally, once you enter into a eligible property investment, all you need to be able to do for the next 5 years is to stay in Portugal for 7 days a year for each one of those 5 years. So basically a holiday a year. So it's quite an easy program to access. And that is part of the reason why the program itself has been so super popular. Now, in terms of some of the key points that come out of the program, I think it's important for people to understand that actually the person that is making the investment into the property that is golden visa eligible is typically referred to as the main applicant. But with that main applicant, the program is actually quite generous in that, for example, a husband can reunify his spouse, his wife, and his children under the age of 18, and his parents or in-laws above the age of 65. So it's quite a generous program in that you can reunify, is the term that they use, 3 generations within one investment. So that definitely has a lot of value for many of our investors. Secondly, it does give you the ability to work and live and travel within Portugal itself, but also within the Schengen zone. So it opens up 26 countries as well. Importantly, and I think this is also a key factor, a lot of people think about acquiring a second residency stroke citizenship as a plan B, i.e. they don't want to move to the country necessarily, but they do want to have an insurance plan B in place. But quite often tax sometimes interrupts that thought process. The good news is by becoming a resident of Portugal does not make you a tax resident of Portugal. So yes, you can have residency in Portugal and citizenship, but that does not mean that your home country income will suddenly be taxed in Portugal. Only income that you receive in Portugal, for example, rental income, is taxed in Portugal. There is also a special tax regime that is available for those people that perhaps want this to be their plan A, i.e. they want to move to Portugal. And if they were to do that by being a golden visa eligible applicant, they can also elect for a special tax regime, whereby for the first 10 years that they are resident in Portugal, i.e. physically living there, they would receive a tax break in that all of their foreign income would be subject to much lower rates of tax than they would ordinarily be if they were just a general resident within Portugal. So those are some of the key requirements and benefits. If we go to the next slide, people often ask, what happens after the 5 years? And I mentioned that the qualifying period for the golden visa is 5 years. And that's a fair question. In fact, Portugal, because of the nature of the flexibility in the program, it gives you 2 choices. It allows you either to convert your golden visa into what they call a permanent residency into Portugal, or indeed it allows you to convert your golden visa at the end of 5 years into citizenship, i.e. a passport. The main reason for offering the 2 options is actually because there are some countries, for example, India, that don't allow their citizens to have 2 passports. So they would typically go for permanent residency. So again, it demonstrates that the Portuguese program is very flexible. For those people that are coming from countries that don't have any restrictions in terms of having dual citizenships, they're open to take the citizenship in Portugal as well, i.e. acquire a passport. Now, the main differences between the 2, because there are some differences, if you have permanent residency, then you can live and work in Portugal only and travel in the Schengen zone up to 90 days visa-free. However, if you go for citizenship, you can actually live and work and travel in any EU member state. So it does open up all of those other 26 countries if you go for citizenship. So that's the difference between the 2. Next slide, Bella. Just a quick comment, because we quite often get asked this. The program itself is obviously a program run by the immigration authorities, which is obviously part of the government of Portugal. And there are some fees to be paid to the immigration authorities for embarking upon the Golden Visa program. And here we've just set those out, how they occur over the 5 years. And so you can see here that actually the main applicant would pay 12,250, which is payable over the 5 years. So typically, for a family of 4, as I mentioned, the main applicant can reunify his spouse and his children, but a typical family of 4, over the 5 years, the cost is around 49,000 euros. So those are the costs that are associated with embarking upon the Golden Visa program. Next slide. So again, I'm keeping one eye on the time. Just to recap where we've got to, we've talked a little bit about the country of Portugal. You now hopefully understand some more detail of the Golden Visa program and what the requirements are to access it. We're now going to land on the investment opportunity that we have launched just over 12 weeks ago. And it is an investment opportunity which is at the price point of 350,000 euros. And it is, because of its location, it is a commercial investment. Now, just to elaborate on that a little bit for a second, the rules regarding Golden Visa investment did change with effect from the 1st of January this year. And in summary, the effect of those changes is that it's no longer possible to invest in residential assets in the city centres of Lisbon and Porto and still qualify under the Golden Visa program. Put differently, even if you were to buy a fancy apartment in Lisbon city centre for 5 million euros, that would be fine for you to acquire that asset, but it wouldn't be Golden Visa eligible. Only assets in the city centres of Lisbon and Porto that qualify for Golden Visa are commercial assets. And those commercial assets have to be of a certain type, i.e. they have to be in a renovation program. So that is this asset, which is Avenida Liberdade, number 227. And you can see on the screen there, for those of you that are not familiar, Avenida Liberdade is the most exclusive boulevard avenue within Lisbon city centre, arguably within the whole of Portugal. It is home to all of the 5-star hotels, all of the international fashion houses, and it's the calling card for any tourist coming to Portugal. Our asset is actually where that arrow is pointing, in the middle of Avenida Liberdade. If you go to the next slide, you can see there a picture of the asset itself. The good news is that the building exists. So whilst it's a trophy asset location, it's actually a trophy asset investment, because the building already exists. It's actually over 30 years old, and that's an important point, because it needs to be greater than 30 years old to be Golden Visa eligible. In fact, the building is 46 years old, and whilst the outside of it is beautiful in terms of its architecture and very much in keeping with the rest of the buildings in Avenida Liberdade, the inside of it is now quite old and dated, and the renovation program is what we are going to be embarking upon to bring the building up to 21st century standard. Now, just to give people an understanding very quickly of the typology of the building, it actually has 2 floors of retail directly onto Avenida Liberdade, and above it 9 floors of office space. I'm going to come back to the location of the asset, because as with anything with property related, it's all about location. So we'll explain a little bit about the location more in a second. But before I do that, I just want to set out what the investment opportunity is. And this is very much focused on the type of investors, at least in our experience, international investors that are perhaps mostly driven by Golden Visa ambitions, but they want to be invested in city centre locations, because in their mind, perhaps for right reasons, their mind, that is the best store of their value of investment, if you like. So they want to have an entry point, a good location, some income along the way, and also an exit at a suitable point in time. So this is very much focused at that type of investor. So what do I mean by that? Well, the investor would be investing 350,000 euros in year 0. It is golden visa eligible, so they can embark upon their golden visa journey. And for the first 3 years, there is a fixed return that is offered to that investor at 3%. Now that's important because actually the fixed returns start from a fixed point in time, i.e. from the 1st of October 2023, irrespective of whether the building is renovated by that point in time or not. In fact, it won't be. And therefore, irrespective of whether there is a tenant in the building. So taking a step back for us a moment, we know that this is a commercial asset investment. Most people that are used to investing in commercial assets expect certain things, including things like yield. And whilst there is this complication with the renovation, which makes it golden visa eligible, we know that investors are not going to be in control of that. We are, and therefore we're effectively de-risking investors from that renovation timeline by offering the fixed return from a fixed point in time. After those first 3 years, it will go on to a market return. We've put here conservatively expect 4% because by that time the building will be renovated and it definitely will be tenanted. And then from year 8, there is a buyback, and the buyback is a mandatory buyback. I'm just going to pause there and explain year 8 and why it's relevant. Year 8 is important because typically by that point in time, most people would have been able to realize their golden visa ambitions and indeed moved on to either permanent residency or passport. So it gives you ample time to envelope your golden visa process. But also property cycles in Europe, more mature markets, tend to be between 7 and 9 years. And therefore, we want to ensure that actually investors who come into this investment, yes, there's a mandatory buyback, but it is at the market price in 8 years' time, minus 10%. So people will have the full opportunity to benefit from that real estate cycle in the optimal fashion. Why minus 10%? Actually, the 10% isn't a profit center. It's actually because whenever anyone acquires property within Portugal, there are acquisition taxes, stamp duties of around 7.5% plus lawyer and admin fees. So the 10% is really just to cover that. So that is the investment opportunity. I'm putting that up right out there so people can keep it at the front of their minds. But if we go to the next slide, I think I want to go back to the location. Now, this is a 3D sectional analysis of Avenida Liberdade, and you can see that our building Liberty is the purple building there highlighted in red, in between the Rolex store and Max Mara. Opposite us is Cartier, Bulgari, Versace, Armani, and the list goes on. So this really hopefully emphasizes how important this exclusive boulevard is from a retailer's point of view and why it's such a trophy asset. And whilst that's important, if we go to the next slide, it is also very important from a commerce point of view. So this is again Avenida Liberdade. You can see our asset there in the middle, and you can see that we're surrounded by all of the large national Portuguese companies, but also all of the multinational companies and indeed embassies, banks, etc., that are looking to sort of have an entry point into Portugal, want to be located along this avenue. Now, all of those two things are important, the retail presence and the commerce presence, because if we go to the next slide, that very much feeds into how a commercial asset is valued. So commercial assets, some of you may be familiar with this, are valued on a far more objective and institutional way, unlike perhaps residential assets, which can be quite subjective. Commercial assets are very objective in that you take the rental values of any commercial asset and you divide it by a capitalization rate. Now, this is an independent valuation that looks at the building. Obviously, it takes into account the trophy asset location, where it is, the comparables in the location. And this puts the valuation of our building at just over 35 million post-renovation. Now, if we pause there for a second and just do some quick mental maths, if every investor is coming in with an investment for 350,000, that actually makes room for just about 101 investors. Now, Grant mentioned that we launched this recently. In fact, we did. We launched it around 12 weeks ago. And in fact, of those 101 slots, we've now taken reservations for 84. So there are 16, 17 slots available. So it's sold extremely well. We did expect it to be popular, but perhaps not as popular as it has been. And I think that's largely because of the fact of its location and the fact that people feel comforted in putting their investment in such a super prime location. Now, the valuation can be shared with those of you who are interested because it's a detailed report after this call. But just to pick up on some of the main factors, it uses a capitalization rate of 4%. If we go to the next slide, I'll come on to explain the context of that because obviously that's important. So the way we've looked at the valuation, and just to give people the comfort of the context, we've broken it down into 3 sections. Number 1 is looking at the activity of reported transactions within Avenida Liberdade today, i.e. the first 6 months of 2022. We've then looked back historically over the last 8 years. And then finally, we forecast a little bit in terms of what could happen, taking into account all of that context for the upcoming next 8 years. So starting with the activity today and the first 6 months of 2022, whether it's Savills, CBRE, JLL reports that you pick up, the soundbite is that they've all recorded very strong and robust transactional activity in the first 6 months of 2022. In terms of what that means, well, on the office side, you can see that yields have been reported in terms of transactions at 4%. Well, that's good news because that's where our valuation was capitalized at. And on the right-hand side, you can see that retail prime rents traded anywhere between 130 to 140 euros per square meter. Now that's interesting because our valuation has been a little bit more conservative than that, in that we only average 90 euros per square meter. So hopefully this gives you the temperature on the ground today, but perhaps not enough information yet. And if we go to the next slide, this is where we look back historically as to what's happened. And again, we've taken the same approach. We've taken the retail rents, the office rents. And if you look at those retail rents over the last 8 years, they've grown cumulatively by 73%, i.e. around 9% per annum. And if you take in that same 8-year period office rents, they've grown by 39%, which is just under 5% per annum. Now, if I pause there for a second and said, well, if I look at that historical growth rate, and if I simply took those and applied them forward to the next upcoming 8 years and valued the building on the same valuation methodology, that would move the valuation of our building from where we are today, 35 million, to 78 million in 8 years' time. Now, the question that you're probably asking yourselves as well, is that growth possible in the upcoming 8 years? Well, the truth is, empirically, it has happened in the last 8 years. But as an investor, I would probably want to take a far more conservative approach, and that is exactly what we've done. We've effectively ignored the historical growth rates of the 9s and 5% and simply taken a far more conservative growth rate of 3% and applying a 3% growth rate for the next upcoming 8 years. That would still move the valuation of our building from today, 35 million, to 47 million in 8 years' time. Now, I'm going to pause there because this sensitivity analysis, if you like, is what I believe has attracted most investors to move quickly on this asset. Yes, the location speaks for itself, but also this sensitivity analysis is, I think, a metric that most investors are able to get comfortable with quite quickly. I think that the sort of remaining question is, well, if you're doing a sensitivity analysis, even in the most conservative view, why do you think a 3% growth rate is achievable in the next 8 years? And I think there's 2 answers to that. One is a technical answer, but then secondly is what we actually believe. Let me start with the technical answer, which is actually, if you're investing in a property investment and you're unable to apply a 3% growth rate, i.e., which is what is equivalent to normalized inflation rate, perhaps you shouldn't be investing in property because another asset class is probably more appropriate for you, like equities. Yes, there may be more risk, but you will achieve those higher growth rates. So that's a technical answer. But if you go to the next slide, why do we feel entirely comfortable with a 3% growth rate? Bella, if you move to the next slide. These two metrics really reinforce why we feel entirely comfortable with a conservative 3% growth rate. This is a comparison of rents in Lisbon versus European capitals on the left-hand side, and on the right-hand side, it's a comparison of yields in Lisbon versus other European capitals. Now you can see there, I know the text is quite small, but the area circled on the left is Lisbon trading at around 135 euros per square meter. Places like London are at 1900, Paris 1800, etc. Now, we don't need to be at those sort of levels to achieve a 3% growth rate. We need to be somewhere near Copenhagen, Dublin, which is around 270, 280. Do we think that that is achievable in the next 8 years? I think our answer would be, as a real estate investor, taking into account the pull to par effect that we expect for Portugal and Lisbon in particular, yes, we think that is entirely achievable. And then on the right-hand side, you can see yields. Currently, Lisbon is trading at 4%. That is where our valuation is at. The European average is 3.63%. Obviously, the more yields compress, the higher our asset value. Do we expect yields to compress by at least 40 basis points in the next 8 years? Well, I think the answer to that is yes as well. Now, if we go to the next slide, and I appreciate I've thrown quite a lot of numbers and metrics at you, but the truth is, actually, this is all very open source because Avenida Liberdade is such an important avenue within the Portuguese context. It's actually a very well reported location as well, which means that whether it's PwC, CBRE, Savills, etc., they're all trend and analyzing both yields and prices per square meter. So for those of you that I'm sure will be doing your own Google searches, you'll come across one of these articles, which simply highlight the fact that actually both pre and post-COVID, Lisbon has been focused on in terms of one of those few real estate opportunities and continues to be the case going forward. We go to the next slide. This is just a visual illustration of those cash flows that I talked about in terms of the investment opportunity. And just to recap, the investment is for 350,000. And then for the first 3 years, you have a fixed return starting from a fixed point in time at 3%. And thereafter, it will go to a market rate of return. We've assumed 4% here conservatively. And then in year 8, the buyback kicks in. Now, I think here you can plug whatever number you feel most comfortable with, whether it's the more bullish scenario or indeed the conservative approach. But either way, I think, as I said, when you go back to your sensitivity analysis, this is probably the metric that gets most people comfortable with the investment. So I think the last slide really is a video of the actual asset itself, which I'm not sure if the sound is playing. Okay, I think we may have lost the sound on the video, but certainly this is something that we can share after the call for people that want to see it. Here you can see Avenida Liberdade, and it really is just showcasing the location itself. And there is at the end of this video actually there's the building itself, the behind of it at least. You can see those 9 floors of office space. It has some interior shots of the building, and people will be able to see, whilst it's in quite a good condition, it does need to be renovated. So Grant, I'm sure, can share this with people that are interested after the call. So Bella, perhaps move on to the last slide. And these are just some of the still imagery of the building. We keep going through these slides, Bella, until we get to the summary page, I think. Here you have some of the concept designs that we are looking to develop within the building itself, very much bringing it up to that sort of 21st century standard. And on the ground floor retail, because we're surrounded by all of these fashion houses, it's probably going to be perhaps a Chanel store, or maybe one of the telecom stores like an Apple store or Samsung shop, etc. So very much in keeping. Now, the summary, again, just to recap everything I've said, is the investment amount is for 350,000, fully Golden Visa eligible. There is income along the way. The first 3 years is fixed. And then by year 8, hopefully people have realized their Golden Visa ambitions, and then there's a natural exit as well. So Grant, I've tried to cover as much as I can in the 35 minutes, but by all means now jump in.
Rakesh, thank you very much indeed. I was chomping at the bit to actually come in on some of those slides, but I knew you had a lot to cover, and I thought I'd raise some points at the end. But no, that was really, really good to provide an update on the actual process, you know, the amount of people who've applied for Golden Visa, and obviously the asset itself, which is a first-class asset. I mean, just some of the points I noted there. I mean, just as a livable place, you know, 60% of the population speak English. I think that's obviously key for you know, lots of people who feel that sort of similarity if they were to move to Portugal. The fact that obviously rule of law is good and crime is low. And in fact, you know, from the investment side, when you're looking at 6.5 billion euros has been invested, as you said there, that you know, economically has a massive effect on Portugal for the positive. So, you know, that was really, really insightful. And of course, you know, the actual asset on Avenue de Liberdade by the Marquês de Pombal, which I've walked down, and actually I walked past that building, I know for a fact, because of the high-end brands on the other side a few years ago. So absolutely fantastic location. You know, we've had a number of questions, and as I say, we try to keep these relatively concise, and certainly I'll follow up on questions afterwards. But, you know, just one from my side. I mean, before we go to some of those key questions, you know, what are you seeing in the market itself at the moment? I mean, are you seeing more interest in the Golden Visa this year than last year? What's sort of going on from your perspective, Rakesh?
Yeah, and I think that's it's a useful question, Grant, because there is a lot of context going on in terms of the answer. The Portuguese Golden Visa program has always been very popular when you compare it to perhaps other offerings, mainly because of the ease in which it can be accessed. There's no lifestyle move, and the tax situation means that you're not becoming a tax resident of the country. I think those are the three main drivers. So it's always been very popular because of that. What I would say is that in the last 12 to 18 months, it has become super popular. We've evidenced that ourselves with the sales of this particular investment. I think there's various macro factors that have played into that popularity, but not least the currency. At the moment, Europe is on sale for many investors that are dollar denominated, perhaps by a discount of around 20%. And therefore, we've seen lots of American investors and lots of US dollar peg investors, whether they be from the Middle East or indeed places like Hong Kong, etc. So it's been very, very popular in the last 18 months, but it's always been reasonably popular.
Yeah, no, I think your point actually on the currency is key, you know, against US dollar, Hong Kong dollar, Sing dollar, dirham, Middle East, you know, it's a super time to invest in the euro, aside from Golden Visa, aside from obviously what we're talking about here with the investment opportunity. So no, I'd absolutely agree. So we'll go to a few questions that our attendees have been asking, Rakesh. So let me just have a look here. Okay, so okay, this is an interesting one here. So in your opinion, which investment is safer to invest in, residential or commercial projects?
Yeah, and that is a fair question. I think a good chunk of the answer to that question is perhaps driven by personal preference, because there are differences between commercial investments and residential investments. Typically, all of our residential Golden Visa eligible products offer a full freehold legal title over individual apartments, whereas a commercial building, and particularly a building like this, whilst you are a freehold title deed owner, you're a co-owner. Every investor is a co-owner in the building. So there's that difference. So there's personal preferences attached to it. But I would say that perhaps with this particular asset, just because of its location, I would say that most of our investors and most of our experience tells us that because of the location of this particular building, a lot of people have just veered to it because of that. I mean, I think that when you're looking at these inflationary times, the economies around the world are going through some bumpy periods. I think most people assign the best probability of stability to super prime locations, and that is what this is. It's a super prime location.
Yeah, no, I think that's absolutely fair. I mean, as we know, this really is the best street in Lisbon. It really is a trophy asset. You know, if you imagine the best streets in London, you know, Oxford Street, Regent Street, Singapore, if you look at Hong Kong, you know, Fifth Avenue, it's the best of the best. So it is a superb asset to invest in and give confidence to the investor. And of course, vacancy rates, when we're looking at tenants, etc., are incredibly low in this type of location. And you know, one of the things that stood out for me as well was the value proposition you put across there when you're talking about, you know, 135 euros per square meter in Lisbon, you know, versus London, which is 1980 euros per square meter. And of course, you know, where costs are focused on so stringently these days, I mean, you can just see that this is a great value proposition for corporates, you know, for the law firms, for all sorts of companies to actually base themselves in Lisbon, and you know, specifically pinpointing this asset, you know, within this building.
Yeah, no, I absolutely agree, Grant. I think that we spotted that at least 4 or 5 years ago. I think that original thinking holds even more true now with costs spiking up everywhere, and I think things will have to move around. And you know, Lisbon continues to be super popular both at the corporate end and at the sort of retail end.
Yeah. So interesting question here. So as we know, we have the buyback in year 8, which is obviously great because there's a defined exit strategy for the investment. The question here is, what is the option if I want to exit the investment early?
Yeah. So this is, as I sort of said, part of the introduction, this was focused on primarily golden visa investors, and therefore that 5-year holding requirement sort of set the pattern up in most people's minds when they were investing. But in fact, actually, we have quite a few non-golden visa investors in this. A lot of Portuguese family offices that want to invest in a trophy asset location. Now, in terms of early exit liquidity, it is an 8-year product to take into account what we thought was going to be most relevant for golden visa investors. But we have in the contracts, in the buyback agreement, the ability for early exit liquidity. It does come at a slight penalty. So you can request an early liquidity no earlier than year 5. So you can exit after year 5 and before year 8, but it will be at a discount versus the par value, meaning that rather than it being repurchased at the market value, it will be a discount against the par value, which is around 225,000 euros. So there is some limited early exit liquidity, but obviously not ideal in terms of if you were holding this to maturity, then it would be an exit at market.
Sure. Okay. Yeah, that all makes sense. So obviously, as we know, this building is established, it's built, so we don't have the developer risk, but of course there will be the renovation work that I think will be taking place over the next sort of year or so, and correct me if I'm wrong. So one of the questions is, I think that's where this question is angled, is there any protection for investors if that sort of work is not completed on time?
Yes, for sure. So just to explain that, there's a couple of components in there that kind of all sit together. So let me just explain. Actually, when you invest in a golden visa renovation project, then you must do so in a particular legal format. And that means that you actually, as an investor, have 2 contracts. One is to acquire a share in the building, And the second contract is actually a renovation works agreement. And both those contracts have value attached to them. So in total, investors are putting in 350,000, but they put in 300,000 against the acquisition of the share in the building. And you can do that in these projects because obviously the building exists, which is why a lot of people are comfortable with this type of setup as opposed to an off-plan purchase. You have an asset immediately, which is a share in the building. And then the balance, i.e. the 50,000, is actually a payment that goes against the renovation works. Now that means for investors that they have a direct contractual relationship with the renovation works contractor. And that renovation contract actually carries all of the usual protections that you might expect to see as someone who's the investor, against delays and all the rest of it, meaning that there are delay penalties in case the contractor is late. They're obviously set up and geared in such a way to disincentivize a contractor from being late, because it can be quite expensive for them in terms of the returns they'd have to pay the investor. Now, some of that is a little bit academic in this particular investment, because going back to the income profile, we've set this up to somewhat de-risk investors from the renovation program to some extent, because we are starting the fixed returns from a fixed point in time, which is the 1st of October 2023. So again, another layer of comfort that investors get. We are underwriting that as an Irish. So we, as managers of the building, and then the person that's going to be buying the building back, want the building to become fully operational as quickly as possible, because otherwise we're on the hook for this 3%. On our own. So again, another incentive to make sure it all happens in a timely fashion.
Okay, great. Thanks, Rakesh. I know we're coming up to the hour mark now, so I think probably we'll wrap up at that point. I know that a lot of individuals are obviously on tight timelines. Was there any sort of closing thoughts from yourself, Rakesh, that you wanted to add?
No, look, I think one thing I would just add is that this the investment opportunity did sort of exceed our expectations in terms of its popularity. And as we head into, dare I say it, Christmas now, the final stretch of the year, I think that there is going to be very good chances that we will sell out in the upcoming sort of month and a half. Just to recap, it was 101 slots we had available. We've now taken bookings for 84. So there's around 16 or 17 left. So for those that are interested, I think whether it's this investment or another one, if they want to consider this one, I would encourage them to do sort of as soon as possible. We're happy to do separate sort of consultative sessions with you, Grant, as well.
Yeah, no, I think that's definitely sound advice. It's been incredibly well received. As you said, we're up to sort of 84 investors now, so it's very, very popular investment opportunity indeed. So yeah, I mean, I know there's been other questions in terms of the sort of legalities, the legal side, the process. I mean, just to add on that, you know, in terms of the specific inquiries, I can assist with that. I work with lawyers, and we can work through individual circumstances and go through particular questions on the golden visa side leading to the passport. So do drop me a line separately. Of course, if there's further information you need from this webinar in terms of the commercial asset, please also reach out to. But you know, Rakesh, just to say, you know, again, we've done a number of these over the last couple of years. You know, thank you very much indeed for your input there. You know, not only on the asset, but from a high level perspective in terms of what's going on in the market, and obviously the latest for the golden visa in Portugal. So, you know, thank you very much indeed for joining today.
No, thank you, guys. It's always good to be with you on these things.
Thank you. And obviously for all the attendees across the US, Singapore, Hong Kong, Middle East, Europe and elsewhere, thank you very much indeed for joining. As I say, if we haven't got to your question, we will get to those questions separately. But as I say, do reach out if you require further information, and it will be a pleasure to help. So thank you very much indeed for joining today. We hope that was helpful on the golden visa. And yeah, look forward to further follow up in due course. Wherever you are, have a good day, good evening, and look forward to speaking again soon. Thank you very much.
Thank you all. Bye-bye.